What sticks out to you for this week, Peter?
It's a continuation of earnings, and I want to hear what happens out of the China trade talks. Because not only are we focused on what the details of the talks are going to be, but are tariffs immediately going to come off, or the U.S. is going to use them as a stick or an enforcement mechanism to eventually take them off, but just not yet, depending on how China adheres to any agreement.
What happens if nothing happens at the trade talks? Both sides leave, no progress.
The market has made it very clear. CEOs have made it very clear that it would be very damaging to the global economy if these tariffs remain in place.
Yeah, because they're going to jack up. What happens if we get a very positive development? That it looks like we're going to avoid that increase in tariffs from 10 to 25%. Does the stock market rally, or is the expectation of a positive outcome already built in?
I think initially it'll rally, but the market wants those tariffs to disappear. They don't want them to stay where they are and maybe some point come off. We want
like a rain cloud just sort of hanging over us.
Exactly.
Right?
We want a deal. We want an end to the tariffs. We want a complete rollback of these tariffs. It's clear that the global economy is slowing. It's clear also, I believe, that the tariff battle and the trade battle with not just China, but with other countries has led to this slowdown. Now, China's been slowing anyway, so I'm not going to blame the trade issues as the reason for the Chinese slowdown, but it is accelerating it. So I think at this point, we want resolution and we want those tariffs to disappear.
You know, it feels like, Peter, it's kind of us against the world. Maybe it's like the Ryder Cup in a way, right? It's America versus everybody else. And if you look at Barron's this weekend, you know, Stop the World was sort of their editorial on the opening pages, which is the rest of the world, China and Europe particularly, are slowing, and we're not. Is the U.S., at 325 million people, but the biggest economy in the world, able to be the Atlas and sort of hold everything else up?
No, it'll be able to hold the U.S. economy up. Maybe it'll keep the U.S. economy continuing to grow, but we're still not going to be immune from all these.
How about the equity markets? Can we hold those up?
So let's take that. 40% of S&P revenue is sourced overseas. Well, we know that's very vulnerable right now. So if the equity market succumbs to worries about earnings growth and that slowdown, well, the equity market, if it corrects, could then have a direct impact on the psyche of the U.S. consumer and then consumer spending. So I argue that the question of when the next recession in the U.S. comes, whenever that might be, could actually be driven about where the stock market goes. Because you get another 20% decline, you get a slowdown in consumer spending, the so-called wealth effect in reverse, that could lead to a downturn in the economy because capital spending and that export side is obviously softening because of the slowdown overseas.
Many of the very fine guests that we have on this very fine program, and I am certainly some of them who will be on in the next couple of minutes, will tell you the earnings season was pretty good. Yeah, we slowed down, but it was good enough. You beg to differ.
I think it was just lackluster. I mean, about 65% of companies are beating EPS estimates. Well, the average is actually about 70.
That sounds good.
Well, the average is about 70.
Yeah, but
70 is normal.
It's not 30%.
Right, but 70 is normal. That's the bar. So you based whether it's good or not above or below that number. And also revenue growth relative to expectations is only about 35 to 40% of companies are beating revenue estimates. What's most noteworthy, though, is not necessarily what they're saying about the fourth quarter. It's what they're saying about the first quarter. So first quarter earnings estimates have now gone slightly negative on a year-over-year basis. Now, granted, the comparisons are very difficult because we got the benefit of the tax increase and a decent economy last year. But earnings estimates have been declining, not just for the first quarter, but for all of 2019.